presentation on the key insights. I have the pleasure of inviting three dynamic personalities who will join us here on stage. First will be the Deputy Chief Executive Officer of LTL Holdings Group, Mr. Ravindra Pittigala, who joined the group in the year 1995 and currently serves as the Director and the Deputy CEO for LTL Holdings. And at LTL Holdings, he has closely worked with a large number of financial institutions, both in and outside of Sri Lanka, securing financial that augurated the continuous growth of LTL Holdings, and he has been involved in structuring, negotiating, and securing financing for large infrastructure projects with a total value exceeding $500 million. And then we'll be joined by the Vice President of NDB Investment Bank, Mr. Savinda Fernando, and the Assistant Vice President for CTCLSA Capital, Mr. Venkatesh Ramaraj. Ladies and gentlemen, we begin with Mr. Pittigala. Can we put our hands together, everybody?
Very good evening, ladies and gentlemen. Chairman of LTL and Chairman of CB, and our board of directors and other distinguished guests. So it's a very happy occasion for all of us at LTL. We have been probably waiting for this day, in my recollection, for more than 10 years. We wanted to make it a public company, and finally we are in the cusp of that moment. And so we are all excited. My task today is to try and give you some overview of what LTL is and what LTL does. To begin with, I think most of you know LTL as a power company, but we think LTL is a little bit more than that, because we are involved in the entire value chain of power supply, from generation to transmission to distribution. So we therefore would like to call ourselves an integrated power company. And as Mr. Marika mentioned, that since 1980, we have come a long way in filling gaps in that value chain to be a fully fledged power integrated supplier. As you see here, we are present in many countries in the region, this way or the other, and we have close to 900 megawatt of power capacity in operation, and we are a company which is earning 70% of our revenue in foreign currency, and we also are a company which has nearly 800 plus workforce, different nationalities. In fact, we have more non-Sri Lankans than Sri Lankans working in this company because we operate in other countries. So to take you through our operations, I think it's easiest to understand that we operate in 5 segments in this power business. The first being that we produce what we call conventional power, that is generating power through reciprocating engines and the combined cycle power plants. Number 2, we also operate renewable energy power plants. And number 3, we build and operate those power plants for us as well as for other clients. And number 4, we manufacture items that are required to provide power from generation until to the final consumer. And number 5, we do steel fabrication and galvanizing required for the infrastructure. So we are in these 5 business areas in our operations, and that actually is carried out by a whole bunch of subsidiaries operating under LTL Holdings. Now, if you look at our financial statements, The first three is clubbed under generation, and the last two is clubbed under manufacturing. But we actually have 5 different segments. The latest of that power generation is the project that we commissioned last week, the Sobadanayu power plant project. Like Mr. Marika mentioned, it is the latest that is technology available for combined cycle power plant in the world. And I just take a moment to explain you the difference between combined cycle power plant from a normal power plant, because we have 2 cycles there. So that is important for our evaluation in the coming slides. So what we commissioned last week is only the open cycle, which is running off a gas turbine, which is coupled to a generator and which produces electricity, and we burn fuel in the gas turbine. And the exhaust of gas turbine we use in the second cycle, where we produce steam and operate a steam turbine to generate electricity through a generator coupled to the steam turbine. And that energy comes without any fuel input. So overall, we reach a 350 megawatt once that second cycle is completed, which hopefully will happen March next year. So we believe that in these 5 operations, we have the cutting edge technology. And we, as a Sri Lankan company, always want to innovate and try to find the best possible technology for our country and to reduce the cost of electricity for our people. And in the power generation, we are proud to say that out of the entire installed capacity of this country, we manage 14% capacity. And if you take the entire electricity that was consumed in Sri Lanka in last financial year, our companies have produced about 7.5% of that energy. So we are a very significant player in Sri Lanka, in addition to our presence in other countries. How we do that is we have 5 power plants, thermal power plants, 2 in Sri Lanka and 3 in Bangladesh, combining a capacity of about 868 megawatts. Once the Sobadanayu second cycle is completed, by financial year 25-26, we will have almost 87% of our revenue coming from these 5 power plants. So it's a significant, more significant to our numbers. The other segment is the renewable energy, which we were a very early entrant to the renewable energy production in Sri Lanka with our Belihulla power plant way back in 2002. So we now have about 16 megawatt of small hydro and wind power operating under the standard power purchase agreements in Sri Lanka. And we went to Nepal and completed a 10 megawatt power plant, like Mr. Marika mentioned, and we commissioned that in last year. Nepal, as you know, is a country with abundant hydro potential. And even though it's a small country with a small population, they have a huge opportunity to cross-border trade of power with India, and they are already doing that. And we wanted to have a piece of that activity by being there well in advance, and we are looking to have more opportunities in Nepal in the future. in the renewable energy. So the other segment of power plant construction and operation. We have so far constructed more than 1,100 of power plants in Sri Lanka, in Nepal, in Bangladesh, and in Maldives by our own engineers. And we are very proud to say that we have, when we say our own engineers, that include Bangladeshi nationals also, we have done a tremendously good job in localizing and adding value to those economies that we operate by reducing the cost of constructing those power plants. How we operate in power generation is obviously through power purchase agreements, which are very long term. And one of the key things from an investor's perspective is that our power purchase agreements, most of them are still in very early stages, meaning they have a long life left. And each power purchase agreement is a source of guaranteed business for the company as long as we maintain certain conditions in the power plant. And from investors' perspective, revenue security. If you take the weighted average life left in all our power purchase agreements, we have 14 years to go in them on average. So it's a long time from an investor's perspective of secured income sources. The other main thing which I like to take you through in this generation is the type of power purchase agreements that we have in our thermal power plants are quite different to the standard power purchase agreements that most of you may be familiar with. Firstly, in the thermal power plants, we actually do not sell electricity. We build power plant capacity, and we make that power plant capacity available to a power utility, like CEB in Sri Lanka or a BPDP in Bangladesh. And that utility will tell when to operate and when to stop. And as long as we make the power plant available, we get paid, irrespective of whether there is a downstream disruption and the power actually cannot be evacuated. We still get paid. Secondly, these power purchase agreements actually have two different components in the tariff. First is the energy charge, which is obviously paid when we generate energy. In other words, when the power plant is utilized by the utility. And the energy charge essentially covers our variable cost of operating the power plant. But what is more important is that the capacity charge, which is paid for the capacity that we make available. And this one is what takes care of the return on equity for the investments that we make, our debt service, and covering the fixed cost of operating the power plant. Now, if you take the average revenue for last 4 years of LTL holdings on a consolidated basis, 40% of our revenue came from this particular capacity component. And that is very significant because that one does not depend on whether our power plants actually operate or not. Just to show you that graphically, if you take a power plant, let's say that power plant can be utilized by the utility for 60% of the time, 40%, 20%, or not used at all. And we still get paid this capacity charge. And if they do decide to operate it, or we instruct us to operate it, then we get the energy charge paid on top of that. That is how our revenue actually is composed. And you will see that our revenue actually is quite large because it's a function of fuel price again. Right? And when you remove those variable costs, what is left to us still is still we get the capacity charge quite intact for our investor returns, and that is very important. So we are not worried about whether the power plants are actually operated. The other very key feature in this type of agreements we have is that we also get paid, in addition to the local currency, we also get paid for certain components in foreign currency. In our case, we have both dollars and euro in our agreements. Now, what that means is, as you would understand, that when we report in the local currency, say in the case of Sri Lanka, when we report in LKR, we are completely hedged against any currency devaluation. And on top of that, we also are getting these tariffs adjusted for inflation. In the case of US dollars, we get adjusted for US inflation, and in the case of euro, we get adjusted for the Eurozone inflation. So we are therefore insulated from the currency fluctuations in our local currency when we report in local currency. And if you take the average of the revenue that we reported over the last 4 years, 70% of our revenue was linked to foreign currency. And that is very key for our investors, I believe. Because even though we are listing ourselves in Colombo Stock Exchange, my opinion is we are good enough to be listed anywhere else in the world because we have foreign currency revenue. And what it also says is that for an investor of our stock, they are essentially insulated to a very great extent from what is happening in Sri Lanka. A lot of people have asked us why we are doing the IPO at this time. And we believe that we are not only a Sri Lanka story. What happens in Sri Lanka is only one factor for us. There are a lot of other things at play, and we believe that investors will also appreciate that. And we think our investors will have a stock which will not wobble around when there is an election round the corner in Sri Lanka. We want to be an outlier in that whole thinking of share prices going up and down on what happens on an election in Sri Lanka. The last thing is, these power purchase agreements are guaranteed by the respective governments. So we sign fuel supply agreements, and they are guaranteed by the government for their obligations to supply us fuel. And we sign power purchase agreements. Those obligations are also guaranteed by the government, including to pay us on time. Now I'll come to the manufacturing sector. Like Mr. Marika mentioned, most of it I will be very brief. So in that value chain I described, we have to take power from generation to consumer. One of the most key equipment is the transformer. And our company started operations as a transformer manufacturer, and that still contributes a significant revenue for us. And that operation is done under LTL Transformers, a fully owned subsidiary of LTL Holdings. And we are the sole supplier of transformers for CEB and LECO, and we have 90% of the rest of the market. And we also export regularly to many utilities in Africa, Middle East, and Asia. Galvanizing, as I said before, is a protection against steel structures being corroded, and that is a key requirement in power systems and also in telecom and shipping industry. And we have the only galvanizing plant which can galvanize large steel structures in Sri Lanka. So we have a monopoly in this business. Then the switchgear manufacturing that we do from India, from our factory in Rajasthan. We produce low voltage and medium voltage switchgear required by the power utilities. And we supply large number of power utilities, state-owned power utilities in India, plus we export from India for more than 25 countries. So those are the 3 manufacturing operations that we do. So for the investors, I think it's very important to know what lies beyond this point for LTL. And Mr. Marika, in fact, touched upon almost all of these, so I will not go into details, but we already have, in terms of generation, we already have 2 solid projects of combined capacity of 450 megawatts. The 100 megawatt Trividhanvi project, where we already have signed the agreements, and the 350 LNG project, which is very similar to the Sobhadanavi project, which we are currently negotiating the power purchase agreement with the government and CEB. So those 2 projects are in fact the projects that will be funded by the IPO proceeds. In addition, we also have a 100 megawatt solar project that we are pursuing in Bangladesh, and also the 8 megawatt solar project that we have already been awarded in India. And the transformer, so we, as I said before, we have been exporting transformers to Africa. Africa is a country with a lot of electrification happening, and there are certain benefits of doing that manufacturing in Africa, because we get certain tax concessions. So we have started putting up a transformer manufacturing facility in Tanzania, which hopefully will start operations almost immediately, and that will serve our African customers going future. And we also similarly are negotiating a galvanizing plant in Bangladesh in a joint venture with a Bangladeshi manufacturer. In the power plant O&M also, we have 4 proposals under evaluation in Bangladesh for power plants of the utility, where we will supply O&M services. And the last one is the most exciting one for us, this LNG infrastructure project to bring LNG to Sri Lanka. So it's very much needed in terms of economy as well as environment. If we can convert only the Sobhadanavi power plant from diesel to LNG, that will save 60 billion rupees to our country every year, and the additional environmental benefits of less carbon dioxide emissions. So we think, therefore, our project with Petronet will bear fruit as soon as possible, and that we will be able to convert these power plants as well as other power plants in Sri Lanka to LNG, and to improve our economy as well as our environment. And one thing, ladies and gentlemen, none of these projects I repeat, none of these projects in this slide are taken for the valuation when we priced this share at 14 rupee 50 cents. That is purely based on already existing cash flows, including the Sobadanwe project. But these are upside to the investors. So I think now it's time for us to discuss the specific IPO numbers. So I will invite Savinda to take the audience through the IPO numbers.
Thank you, Ravinder. Good evening, ladies and gentlemen. So I'll start with the shareholding structure of LTL, the pre-IPO shareholding structure of LTL. The single largest shareholder at present is the CEB with 35%, and West Coast Power, which is the entity that owns the Yugadhanaway power plant, has a 28% stake in LTL Holdings. Two employee-owned investment companies, that's Peredev and TechPro, collectively hold 37% at present. Now, post-IPO, all existing shareholders will be diluted by 22%, and the two single largest shareholders pre-IPO, that's the CEB and the West Coast, which had 63% between them, will be diluted to just under 49% post-listing. All existing shareholders will also be locked in for 6 months as per CSE listing guidelines. Moving on to the board of directors, I think in terms of the employee representatives on the board or the employee-owned investment holding company representatives of the board, that's Mr. Jayawardena, Mr. Marika, and Mr. Pitikalage. I think we've already had quite a few introductions, so I'll skip through them at this point. You also have Mr. Gamini Sarath, who is the Deputy CEO of Finance of LTL and serves as an alternate director to Mr. Ravindra Pitikalage, who's been involved with the company for well over a decade. Then you have Mr. Nalinda Ilangakon, who is the chairman of LTL, as well as the chairman of the CEB. Then you have a number of decorated veterans that serve in the capacity of independent directors, including Mr. Riaz Mueller, Mr. Vajra Kulatilaka, Professor Srimala Aberatna, and Mr. Jyotipala Gamage. And finally, Mr. Ruan Meepura, who is a treasury nominee on behalf of the CEB. Right, so moving on to the financials, I'll walk you through some of the variability or some of the variances that you see in the historical numbers before moving on to the forecast financials. So starting with FY22, you'll notice a significant increase in revenue. That's a near almost doubling of revenue in FY22. If you recall what Ravindra mentioned or what Ravindra discussed on PPA tariff structures on one of the previous slides, with increasing levels of dispatch or increasing levels of generation, you have a significant increase in your revenue with a corresponding increase in your cost of sales, because a large part of that jump is attributed to your fuel reimbursement. As a result, while your GP in absolute terms may increase, your GP margin is deflated. So that's what you see in FY22 as a result of unusually high level of dispatch or generation that took place in Bangladesh. What you'll also notice despite this is that there is a decrease in GP in absolute terms in FY22. Now what you have to bear in mind is that FY22 was a year where we were on the back end of the pandemic and at the onset of the economic crisis. So there was a slowdown in some of the other operating segments of LTL that led to this marginal decrease. Now dispatch levels in Bangladesh normalized subsequently in FY23. So that increase that you see in revenue is primarily attributable to the devaluation of the LKR. And that benefit then flows down to the bottom of the P&L. So before zooming in on the most recent financial year, that's FY24, I'll draw your attention to the line item that we've titled Adjusted EBITDA, which is essentially the EBITDA generated from the core operations of the LTL group. Now you'll notice that in 3 of the 4 historical years that we've displayed here, we've actually adjusted downwards. And we've adjusted for significant exchange gains enjoyed as a result of the forex reserves held by the company, particularly in FY23, as well as certain one-off incomes and one-off provisions that hit the P&L in these respective financial years. Moving on to FY24, despite there being an increase in revenue, GP in absolute terms, as well as adjusted EBITDA, there is a significant decrease in profitability, both in absolute terms and in terms of margins. So now what happened in FY24 is that a significant part of the construction of the Sobha plant took place in this year. And as a result of certain delays in the disbursement of the project loans, primarily as a result of the country being in a default status, Lakdanavi, which is a subsidiary of LTL and the shareholder of Sobha Danavi, had to utilize a majority of its reserves to finance the construction of the power plant. In fact, Lakdanavi had to go over and above its equity requirement by borrowing off the strength of its balance sheet and on-lending to Sobha Danavi to continue the construction as originally planned. So as a result of this, there is an increase in net finance costs, which has hit the P&L, which would have otherwise been capitalized. So with that, I'll move on to the forecast financial years. Immediately, you'll notice that there is about a 30 billion increase in revenue in FY25, followed by a further 60 billion jump in FY26. There is also a corresponding increase in GB, albeit marginal in FY25, but a near doubling in FY26. So this is almost entirely as a result of the commissioning of the Sobha Danavi power plant, initially in open cycle phase in FY25, and then under combined cycle operations in FY26. Again, as Ravindra explained earlier on in the presentation, the difference between open cycle operations and combined cycle operations in terms of the financials is a significant increase in the efficiency of the power plant. That is why you see this that is why you see the deflation of margins initially in FY25 and a corresponding normalization in FY26 with the full commissioning of the power plant in FY25. A few key points I want to note here in terms of the forecast overall. The first is that the use of proceeds which are going into the 100 megawatt solar Rividanavi, as well as the second 350 megawatt LNG power plant Sahasranavi, the financial impact of both of these power projects are not reflected on this P&L. The financial impact stemming from the 8 megawatts secured in India, as well as the development of the LNG infrastructure and the supply of LNG are also not captured in this forecast, and the valuations as well, which Venkatesh will take you through a little later on. So this is an outright pre-money forecast. Moving on to the balance sheet, the historical balance sheet of LTL. The NAV of the group as at March 31st, 2024 was 56.6 billion, which translates to a per share value of 11 rupees and 79 cents. Post-listing with the raise of 20 billion LKR, this NAV will grow to 76.6 billion. The two other points that I want to draw your attention to here, one is the ROE. You'll notice the deflation in ROE, in FY24 to a single digit level. This is once again as a result of the drags on the P&L that took place in FY24 for the reasons I discussed earlier. Post full commissioning in FY26, you'd expect to see a consistent ROE in excess of 20% going forward. The final point to mention on this slide is with regard to the total debt on the balance sheet of LTL. Now, LTL Holdings as a company is essentially the holding company for the group and has almost no debt on the balance sheet at present. So all of the debt that you see, the near 50 billion that's on the screen here, resides at individual SPVs or individual project company level. So with that, I'll hand over to Venkatesh to take you through the final leg of the presentation. Thank you.
Thanks, Harinder. Good evening, ladies and gentlemen. In this segment of the presentation, I will take you through the key IPO highlights. LTL Holding is set to raise LKR 16 billion via an offer for subscription with a green show option to raise a further 4 billion. The total capital raise is will be LKR 20 billion with both the initial issue and the further issue, which translates to a equity stake of maximum stake of 22.3. This IPO will mark as the largest IPO in the history of Colombo Stock Exchange. The IPO has been priced at 14.5 rupees, and for 1.5 billion of ordinary voting share has been issued to the public, which represents a 22.3% maximum stake offered in LTL. At the issue price, the LTL pre-money valuation stands at LKR 70 billion, and the post-money valuation stands at 90 billion. At the post-money valuation of LKR 90 billion, LTL will stand amongst the top 15 largest listed companies in the country. The IPO is set to open on 10th September 2024. The equity capital that is raised via the IPO will be deployed for two key strategic investments of LTL, which will fund the future growth of LTL. Out of the LKR 20 billion, 13.5 billion will be utilized for the Sahas Danavi project. Sahas Danavi is a 350 megawatt combined cycle power plant, which is the second gas-fired power plant in the country. This will be located in the Kerawalapitiya. The plant has the capability to run in multi-fuel, that is, has the capability to run in diesel, LNG, and as well as hydrogen, if the infrastructure is available in the country. The project is estimated to cost $250 million, and the project is expected to fund it through a debt to equity mix of 70-30. The equity IRR of the project is estimated to be above 15%. In terms of the timeline, the LOI for the project has already been awarded, that is in December 2023, to Lakdanavi, which is the subsidiary of LTL. And the project is expected to commence construction in second quarter of 2025, and with a lead construction time of over 24 to 30 months. Moving on to the next is LKR 6 billion will be utilized for the Rividanavi project. This will be the entire equity that LTL will be required for this project will be utilized for this. This is a 100 megawatt solar power plant, the first large-scale solar power plant to be developed in Sri Lanka. This is a joint venture project where LTL will be the lead member and also the joint EPC and O&M contractor for the project. In terms of the cost, it will cost estimated to be LKR 133 million, and it will be funded via a debt to equity mix of 70-30. The estimated IRR of the project is approximately 15%. The construction of the project has already been commenced, and we estimate the project to complete by third quarter 2026. In total, these two projects will contribute 400 megawatt of installed capacity, not only to LTL, also to the CEB power grid. Moving on to the IPO valuation and pricing. So we have considered DCF as the primary method of valuation. Based on an SOTP valuation, we have derived an implied pre-money valuation of 93 billion. That is LKR 19.39 rupees per share. We have offered a 25% discount to this, which translates to the 14.5 rupees IPO price. With this, it offers a 34% upside to the incoming investors. In terms of the composition of the valuation, the 75% of the valuation is derived from the power generation from Sri Lanka and Nepal, and power generation from Bangladesh will contribute 12% of the total valuation, and the remainder will be from manufacturing and other segments. I wish to reiterate something that was mentioned in both Mr. Ravinder's and Savinder's section, is that the valuation is done on a pre-money valuation basis. That is, it accounts only for the existing operations, and the future operations of LTL has not been considered in the forecast. At an IPO price of 14.5 rupees, the 1-year forward PE stands at 11.9 times, and the 2-year forward PE stands at 4.6 times. For some reasons that was highlighted earlier in the presentation, very specifically the financial section of the presentation, since the full effect of Subhadanavi is only be reflected in FY26 onwards, because the combined cycle operation will commission on March 2025, we wish to highlight the most appropriate earning multiple that is applicable for LTL will be the FY26 multiple. To give some context to it, the LTL group EBITDA versus Subhadanavi's contribution in FY26, around 54% of EBITDA will be contributed by Subhadanavi in FY26, whereas it only contributes around 7% in FY25. Since LTL is a large, is a diversified power conglomerate with having integrated into not only into power generation such as the conventional and renewable power generation, it also has exposure to manufacturing. So given these reasons, we believe there is no direct peer for LTL. But for the purpose of comparison, we have considered Windforce as a peer, as a proxy. Compared to its proxy, LTL's priced at a significant discount. LTL also is intended to maintain a minimum of 40% of dividend payout, which translates to an 8 to 10% of dividend yield for next 4 years from FY26. I would like to draw your attention that this dividend that we are stating is net of tax because it is stemming from its subsidiaries. Just to summarize what was discussed today and why we would like to see what makes this interesting investment proposition for the upcoming investors. LTL is the largest IPP in Sri Lanka, having both existing and secured capacity exceeding the 1,000 megawatt mark. And also, it not only has exposure in Sri Lanka, it has plants in Bangladesh, India, and Nepal. LTL is an integrated power player with having a dominance presence in the manufacturing segment. In fact, it commands market leadership in the transformer business and also in the heavy engineering business. Moving to the third pillar, given that there is a 37% stake held by the employees, both the shareholders and the employees' interests are aligned. Further, since the EPC and O&M contracts has been in-house, this allows LTL to consistently bid competitively, not only in Sri Lanka, across the globe, while maintaining a minimum hurdle rate. So these three strengths do translate to a better performance. LTL has in the past have averaged the PAT margin of 30% with an ROE of 25%. With the commencement of Subhadanavi in FY26, we expect the EBITDA to grow by almost 2.8 times. With this, I will conclude my presentation and thank you everyone for listening. Thank you.
Thank you very much to the Deputy Chief Executive Officer of LTL Holdings Group, Mr. Ravindra Pittigalage, and the Vice President, NDB Investment Bank, Mr. Savinda Fernando, and the Assistant Vice President, CTCLA SA Capital, Mr. Venkatesh Ramraj, for taking us through the key insights, the strategic direction, as well as the financial outlook and investment potential for